Yes. So in the previous hour, we have discussed about format of balance sheet and profit and loss account. So let us go through the format once again before solving the problem. See this format of balance sheet consists of 21 working note that we have already discussed, and under liability, first one is equities and liability. Under equities and liability, first thing comes is shareholders fund. Shareholders fund is divided into two types. One is share capital, working note number one. Second one is reserves and surplus, working note number two. So again, under reserves and surplus, again it is divided. Again it is divided into two category. One is, yes, it is divided into two category. One is reserves and one more is profit and loss account. Then share application pending money allotment, that is working note number for that not there. If there is any allotment is not made but application money is received by the company, in that case you have to show that amount uh, under this one. That is point number two. Then non-current liabilities, under that there are four category. Long-term borrowing, working note number three. Under long-term borrowing there are again two categories: secured loan and unsecured loan. Then comes deferred tax liability. If there is any difference between book and accounting profit, or book profit and tax profit, if there is any difference, then there will be deferred tax liability. Other long-term liability, working note number 5. Then similarly there is a long-term provision, that is working note number 6. So these four things comes under non-current liability, usually more than 1 year. Then fourth heading under liability is current liability. Again four categories are there. Short-term borrowing, working note number 7. Trade payable usually consists of creditor, working note 8. Other current liability, if there is any bills payable, if there is any dividend which is not claimed, all these things comes under other current liability. Then there is a short-term provision. If there is any taxation provision is provided, then you have to consider that under this one, short-term provision, working note number 10. So after doing first 10 working note, you will get the total. So that is nothing but total of the liability side. Hence we are preparing vertical form of the balance sheet. Total of the liability side is equal to total of the asset side. So asset side consists of uh, 11 to 21. That is 11 working note is there for asset, and 10 working note is there for liability. So total number of working net for balance sheet, that is 21. So if you see asset side, there are again two main categories. One is non-current asset, those assets which are not held in the business for the purpose of sale. So for example, fixed asset, working note 11. Then investment, working note 12. Deferred tax asset, that is 13. Long term loans and advance, that is the advance or loan given by the company to the third party, 14. Then other non current asset, if there is any specified asset is given, that is working note number 15. Then one more category comes under asset is current asset. Current asset means it is a short term in nature, usually less than 1 year. Under current asset, we have to record current investment, that is usually investment less than 1 year. Inventory, we have to write closing stock balance here. Trade receivable, we have to write debtor balance. Cash and cash equivalent, we have to write cash in hand, cash at bank balance here, that is working note number 19. Then short-term loans and advances. Again, if loans and advances given by the company to the third party, usually lesser than 1 year duration, in that case you have to consider this under this particular column. Then other current asset. Other current asset includes preliminary expenses, then discount on issue of debenture. So all these things comes under other current asset. So under whenever we are preparing asset side, prepaid insurance, again prepaid insurance also comes under this other current asset. So total 21 working notes are there. Then statement of profit and loss account we have to see. So whenever we are discussing about profit and loss account, first we have to find out total revenue. So total revenue means note number 22, that is revenue from operation, nothing but sale minus sales return information. Other income. Other income means any credit side income that is given in the trail balance. So that you have to record. Then you will get total revenue. Then from total revenue you have to deduct various expenses. So for example, cost of material consumed like raw material, work in progress, spare parts, etc. you have to consider under 24, working note number 24. Then purchase of stock in trade, purchase information, purchase minus purchase return, that is working note number 25. Changes in inventory, opening stock minus closing stock information you have to consider, that is working note number 26. And employee benefit expenses, any remuneration given to the employee, that may be in the form of a salary or in the form of wages, that you have to consider under working note number 27. Then finance cost. Finance cost means any debenture interest is given in the question, or any charges made by the bank, then the interest on loan, all these things comes under finance cost. Then depreciation and amortization expenses, any depreciation on fixed asset you have to consider, whether it is given in the trail balance or it is given in the adjustment, you have to show. Then similarly amortization expenses means anything which is written off in nature, that also you have to consider under working note number 29. Then other expenses. Other expenses includes office expenses, carriage inwards, then all other type of expenses, insurance. So all these things comes under other expenses. Then you will get total expenses. So now we want a profit before exceptional items and tax. So total revenue answer minus total expenses answer, you will get profit before exceptional item and tax. And from this you have to deduct certain things. One is exceptional item. If any exceptional item is given, then you have to consider, or else tax expenses. Taxation provision will be given in the adjustment, that you have to see. Then if there is any dividend paid by the company on corporate dividend tax, so on the dividend paid by the company has to pay tax. So that tax is known as corporate dividend tax. So that tax also we have to consider under this one. See this, tax expenses. Then profit for the period we can get. How to get profit for the period? Total expenses. After deducting the total expenses from total revenue, you will get profit before exceptional item and tax. From exceptional item and tax, you have to deduct exceptional items and tax expenses. You will get profit for the period. So under profit and loss account, there are 9 working notes. Total 21 plus 9, 30 working notes are there. So now let us discuss the problem. So see this is a problem number 1. Following is the trail balance of Sunrise Limited as on 31st March 2015. So particular and debit and credit side information is given. So now what we should do while solving the problem is, first we should decide that particular information comes under which working note. So that we have to decide now. So see this. So now machinery. Machinery they have given in the trail balance where it will appear. Can you tell me machinery where it will appear? Now we have discussed 30 working notes. Under 30 working note where it will appear? Can you tell me now? Machinery. Under which head it comes? Whether it comes in the asset side. If it comes in the asset side, under which head or under which working note? Yes, Amrita is saying asset side, and asset side machinery is a fixed asset. So fixed asset working note number we want. So what is the fixed asset working note number here? Fixed asset working note number, once you see the format, that is 11. See this. Fixed asset working note number is 11. So you can write, if whenever you are solving, you can write there in front of that machinery 11. So then it will be easy to solve. Then next one, interim dividend. So interim dividend where it will come? So for this there is an adjustment. So adjustment, that is P&L adjustment item, interim dividend. And one more thing, whatever given in the adjustment, that is in the question there is adjustments, they will give 4 to 5 adjustment. So whatever given in the adjustment has to appear twice. and whatever given in the trail balance has to appear once, only once. So we have to see now how it will appear now. Interim dividend means dividend paid somewhere in between the year, somewhere in between of between the financial year. That is why this dividend we have to consider while calculating corporate dividend tax. Why we have to consider while calculating corporate dividend tax? Because corporate dividend tax is calculated on total dividend paid by the company. So how company pays dividend? So for payment of dividend, first thing we need is a percentage of dividend. What is the percentage of dividend that we need? And one more thing is required is what? Can you tell me now? What is required? Once we got the percentage of dividend, next thing from where we can distribute the dividend, we want paid up capital information. So if paid up capital information is given in the trail balance, then we can take 10% of paid up capital, then we will get the dividend amount. So this is a total dividend paid for 1 year. Next thing we have to see, interim dividend is given, that is separate. Other than this dividend, interim dividend is also given. So we have to add both. For example, now 20,000 amount comes for 1 year and interim dividend is 10,000. We have to add both. Then our total dividend becomes 30,000. So 30,000 on 30,000 we have to see corporate dividend tax rate. So that will be given in the adjustment. So for example, corporate dividend tax rate may be 20%. So on 30,000 you have to take 20%. So here interim dividend calculation is required for P&L adjustment. So now this is very clear. So next thing is the debtor. Debtor where it comes. Can you tell me? Debtor where it will appear. Debtor under asset side under which head? Can you tell me now? Yes. Akamsha, Amrita, Anusha, Ashish, Kushal, Suresh, Vivek. Yes, tell me where it will appear. Debtor information. Debtor information asset. Under asset, whether it is fixed asset or current asset. Can you tell me whether it is fixed asset or current asset? Debtor. It is current asset. Yes, correct. So under current asset, we have to see the working note number. Now we know that debtor is a current asset. So current asset working note number, it is 18, 18 working note. That is trade receivable. I feel working note number 18, that is trade receivable. It is regarding the calculation of debtor. So here you have to consider debtor information. Then, when considering the debtor information, you have to see whether there is RBD, reserve for doubtful debt, is given in the problem. If it is given in the problem, then we have to see whether it is a new RBD or whether it is a old RBD. If it is a new RBD means after the preparation of the trail balance, in the adjustment if they have mentioned anything, then that becomes a new RBD. Why? Because after the preparation they have given us some adjustment. What is the old RBD? Reserve for doubtful debts or reserve for bad debt, that is already there in trail balance. Whatever the information already there in trade balance, that is old reserve for a doubtful debt. Then again after these two types, then separate bad debts will be there. That will be given in the trail balance. That also we have to see. Bad debts under which category it comes. So now we discussed about a debtor. So debtor we know it comes under trade receivable 18. Next investment. See this now. Investment again asset side. Asset side, now where you are going to write the investment, because no information is given. So we will assume that investment is a long term in nature. So we have to see non-current asset format. Under non-current asset, after fixed asset, there is immediately second working note, that is working note number 12, that is non-current investment. So under non-current investment, you are going to show this information. So that is about investment. Then depreciation. See this, very important now. Depreciation on building and machinery. So now we have to see this depreciation already calculated and already given in the trail balance. That is why we have to show this information in working note number 29. Why 29? Because it is P&L item. P&L item, if you see, working note number 29 is for depreciation and amortization expenses. So now we have to consider these items under that category. Suppose depreciation percentage is given in the adjustment, then what you are going to do? Again, you have to show these things under depreciation. Then you have to deduct from the concerned asset if percentage is given. Here no percentage is given, so only you have to show under working note number 29. So that is about building and machinery depreciation given. Then these two things, can you tell me wages and salaries where it will come? Can you tell me now, anyone? Wages and salary, whether it will come in balance sheet or it will come in profit and loss account. If it comes in profit and loss account, under which working note? Yes, tell me now. This one we have discussed. Wages, salary. Given to whom? Wages and salary, it is given to whom? If a company is giving the wages and salary, it is given to employee. Yes, it is given to employee. So we have to see under format employee benefit expenses. Employee benefit expenses comes in P&L working note. So profit and loss account working note number 27, that is employee benefit expenses. You have to consider these two information, that is wages and salary. But now if there is any outstanding wages is given in the adjustment, then you have to consider that also. Outstanding wages means wages not paid. Similarly, outstanding rent, which is due but not received or not paid. So that is why it is outstanding. That information you have to add if it is given. Here it is not given, so directly you can write under 27. Next thing, bad debt. So this bad debt, where it will appear, we have to see. So bad debt, we can say it appears under working note number 30. So it is one type of other expenses. So profit and loss account statement, under that bad debt, working note number 30, other expenses, where you can show. After showing the bad debt, then you have to see debtor value, and on that debtor value you have to calculate RBD information. Then after calculating the RBD information, you will get that whether it is a new RBD or old RBD. Once it is a new RBD, you have to add that information. If it is a old RBD, you have to deduct that information. That we are going to see while solving the problem. Then director's fee given in the debit side. So all these information, whatever now we are discussing, this is given in the debit side. So director's fee, where it will come? Can you tell me now? Director's fee, where it will come? Whether balance sheet or profit and loss. Yes, Anusha is saying correct. So director's fee is other expense. So 30, working note number 30, under profit and loss account statement, you have to show director's fee. Now it is clear. Next, debenture interest, in bracket they have given 39 2014 900. So again it is a debit side information. Debenture interest, can you tell me now where it will come? Debenture interest. Debenture interest under P&L. So I have given you the hint, under P&L it will appear, but under which working note? That you have to tell me. Debenture interest. Yes, whether it is a finance cost, whether debenture interest is a finance cost. Yes, it is a finance cost. That is why debenture interest you have to show under working note number 28, finance cost. But while showing the debenture interest, there is one bracket information. What is this bracket information? 39 2014 debenture interest paid, that is 900. So our financial year starts from April. So April, May, June, July, August, and September. So how many months? So there are 6 months. So only for 6 month debenture interest is paid and remaining month is not paid. So remaining month means during one operating cycle, remaining month is October, November, December, January, February, March. So these 6 months it is not paid. So outstanding debenture interest is there, that we have to add that information. So that we have to consider, that is 900. Again 900 we have to add to the debenture interest. So we will get the debenture interest for one operating period or one operating cycle. Then insurance. Insurance, where it will come? Insurance is other expense. Insurance is other expense. So other expense means working note number 30. You have to show insurance. Then cash at bank. So this is very simple. Cash at bank, if you see the format, you can easily tell where it will appear. Whether it is profit and loss account or whether voice is breaking. Can you hear my voice? Whether it is audible? Can you tell me whether I am audible? Just let me know. Can you hear me now? Yes. Whether voice is breaking, Kushal? I hope voice is not breaking, because some issues will be there. Yes, 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 yes. Fine. So now we are discussing about cash at bank. So cash at bank, where it will come? So we have to see balance sheet. Balance sheet, there is one working note under asset, that is cash and cash equivalent. Cash and cash equivalent working note number you have to remember. Here I feel it is working number 19. So let us see whether it is correct or not. Yes. So cash and cash equivalent working note number 19. There you have to record cash at bank information. Then building. Building, you know, fixed asset. So whenever it is a fixed asset, you have to write it under working note number 11, specifically given for fixed asset. Then office expenses. Office expenses and carriage inward. Can you tell me where it will come? Office expenses and carriage inward. Other expense. Yes, correct answer. Both the things you have to show under other expense. So now, what do you mean by carriage inward? What do you mean by carriage inward? Cost incurred by the company for the supply of the goods. That is, suppose other company is supplying the goods to this particular company, and whatever the cost incurred during that process is known as carriage inwards. Then what do you mean by carriage outwards? Carriage outwards means cost incurred by the company to transport the goods from its place to the place of customer. So in that case it becomes carriage outwards. So carriage inward and carriage outward, those are two different things. So office expense, carriage inward, working note number 30. You have to show other expense. Now next thing, discount on debenture. Discount on debenture, where it will come? Can you tell me discount on debenture? Very important. Discount on debenture, where it will come? So here two things now. Discount on debenture. Here two times it will appear. Why? Because there is one adjustment is there for discount on debenture. So it is one kind of other asset, other current asset. So other current asset under working note number 21 in balance sheet you have to show. Then one more adjustment is given in this question. That is why that adjustment appears under working note number 29, that is depreciation and amortization expenses. That is nothing but a discount on debenture written off. Something they have mentioned here that we will discuss later. Discount on debenture written off is given. So that you have to show it under 29. working note. Then purchases, very clear. Now purchases very easy. If you see P and L, where it will come, purchases information. Working note number, can you tell me? Purchases. Yes, can you tell me the working note number for purchases? Whether it is working note number 25. Because purchase of stock in a trade means purchase minus purchase return. So that is working note number 25. Why? 24th working note is cost of material consumed. That is immediately after total revenue, first working note. Working note number 24, cost of material consumed. And 25 is purchase of stock in trade. So here under purchase of stock in trade, you have to consider this purchase information. Next, goodwill. Goodwill, where it will come. So here you can say goodwill is intangible asset, but where you will show this information. Whether can you consider intangible asset as fixed asset? Can you tell me? Can you consider intangible asset as a fixed asset? Yes. So you have to show this goodwill information where under fixed asset, that is working note number 21. Working note number 21, you have to consider this information. Yes. Next thing we have to see here, opening stock. Opening stock, where it will come. So opening stock given in the trail balance. So here opening stock comes, we have to see inventory. Changes in inventory under P and L account. So P and L account, changes in inventory means difference between opening stock and closing stock. So here you have to show that information under changes in inventory. Working note number you have to remember. So that is maybe 26, I feel. That is, yes, see this changes in inventory, working note number 26. So there you have to show that information. Then next thing comes is paid up capital. Very simple. Paid up capital, working note number, can you tell me? This is simple working note number. Can you tell me here? Paid up capital. What is the working note number for paid up capital? Yes, tell me. Liability, first working note. Yes, Anusha is saying 1. So that is the correct answer. Share capital. Under share capital, you have to show this paid up capital. So working note number 1, paid up capital. Next, unclaimed dividend. It is given in the trail balance. So whether it is a current liability. So first thing we have to decide whether this is a current liability. Unclaimed dividend means dividend which is not claimed, which is due but it is not claimed. So it is a current liability and we have to show this under other current liability. Other current liability, we have to show this information. So here you see working note number 9, under balance sheet you have to show this one. Then debenture redemption fund. So fund, you know, that is under reserves and surplus. You have to consider this information. Debenture redemption fund, working note number 2, under reserves and surplus, you will show this one. Then sales. Sales information, that is revenue from operation. Revenue from operation, profit and loss account, first working note number 22. So there you have to show this sales information. Debenture redemption fund, working note number 2, sales, working note number 22. Then the bills payable, where you will show this bills payable. Bills payable, whether it is a trade payable. First question, whether it is a trade payable. Can you tell me now whether, can you show this bills payable under trade payable? Whether that is possible. Trade payable means creditor information you can show. But can you show bills payable information under trade payable? Yes, Akamsha, Amrita, Anusha, Ashish, Kushal, Suresh and Vivek. Yes, Anusha is saying no. That is the right answer. There you cannot show. So we will treat this bills payable as other current liability. Other current liability means working note number 9, where we have taken unclaimed dividend. Along with that, you have to take this one also, bills payable also. Suppose bills receivable is given in the question, that is other current asset. Other current asset working note 21. There you have to write if bills receivable is given in the question. Here it is not given, bills payable we have taken. Next, interest on debenture redemption fund investment. So this interest, whether it belongs to fund category, can you tell me? Because there is a debenture redemption fund, DRF account is given in the trail balance, and on that account we have discussed this one while preparing the debenture. After preparing the DRF account, we used to prepare a DRFI account. So now there is a interest on debenture redemption fund investment. It is related to the fund category. So whenever it is related to the fund category under reserves, that is working note number 2, there you have to write this information. 800 you have to show. Then next thing is general reserve. General reserve, you know, very simple. Working note number 2. Directly working note number 2. Reserves and surplus. There you have to show. Then debenture. This is very important. 6% debenture. Where it will appear? Can you tell me? 6% debenture. Debenture is a liability, we know. So can you tell me the working note number for debenture? Whether it is a short term borrowing, whether it is a short term borrowing, whether it is a long term borrowing, can you tell me? Debenture, debenture is a long term, correct? Amrita is saying correct answer. So here long term borrowing working note we have to see. So long term borrowing working note is working note number 3. Here you have to write a debenture. But after writing debenture, you have to see whether there is any adjustment is given for a debenture. So if there is any adjustment is there, then you have to consider that adjustment also. That we'll see while solving the problem. Then reserve for a doubtful debt. So what is this information? Reserve for doubtful debt given in the trail balance. So can you tell me whether it is a new RBD or old RBD? Can you tell me now? Reserve for doubtful debt given in the trail balance, already given. Yes, Amrita is saying the correct answer, that is old RBD. So this comes under working note number 30. There is an adjustment is there. Working note number 30 adjustment. Here you have to show reserve for doubtful debt. Then profit and loss account. Profit and loss account given in the trail balance means this profit and loss account is of the previous year brought forward balance. This you have to show under working note number 2. That is under working note number 2, that is a reserves, one category is there. Then a profit and loss account, one more category is there. So under profit and loss account you have to write this information. That is under balance sheet liability working note number 2, 11,500. Next, transfer fee. Can you tell me if you tell this, then it is well and good. Can you tell me now transfer fee where it will appear? Balance sheet or profit and loss account? Transfer fee. Can you tell me now? Anusha is saying P and L. Yes, so that is correct. P and L it will appear. Transfer P where it will come. Whether it is debit balance or credit balance, that we have to see. See this. This transfer fee given in the credit side. So transfer fee credit balance we are having. So whether it is an expense, we cannot show that under other expense. So there is other income column is there, right? Other income. So that is a credit side balance, working note number 23, after revenue from operation. Here you have to show this transfer fee information. So that is about working note number 23. Then creditor. Creditor, you have to tell me now where it will come. Creditor, liability side, but working note. What is the working note head for creditor? What is the working note head for creditor? Can you tell me? Trade payable. Yes, correct answer. So Anusha is saying trade payable. So trade payable is a correct answer. That is working note number 8. There you have to show this creditor information. And you have to see whether there is any adjustment for creditor. If there is adjustment for creditor, that also we have to consider. So now we have discussed all the items in the question that is given in the trail balance. Now, after discussing all the items, now we have to see adjustment. See this? Now, adjustment one by one we have to discuss because this problem is very, very lengthy in nature. I have already told you about this. First one, maintain 6% RBD. So now, RBD information 6% means on which amount we are going to calculate RBD here? Debtor. Debtor balance we want. So debtor balance, if you see here where it is given, debtor we want, see this 25,000 debtor. So on 25,000 take 6%. So you will get a new RBD. So this is a reserve for bad doubtful debt that is given in the adjustment. So this is a new RBD. So new RBD you have to add and old RBD you have to deduct. That we are going to see. Next thing, 300 insurance paid is for 1 year up to 36 2015. So what do you mean by this one? Can you tell the meaning of this sentence? Second one, can you tell me the meaning of this one? What do you understand by this sentence? 300 paid, it seems, that is up to 1 year, 36 2015. Whether it is outstanding or whether it is prepaid. Can you tell me? Whether it is outstanding or it is a prepaid, advance insurance paid. Why it is a advance? See, it is a prepaid insurance. It is adjustment is regarding prepaid insurance. Why? Because our this trail balance ends, that is trail balance date is given in the question, that is 31/3/2015. So as on that date all the information they have provided. So now they are saying after 31/3/2015 still 3 more months. See this, 3 more months means that is April, May and June insurance is paid. So this insurance is paid at the time of 31/3/2015. That is why this 300 is a prepaid insurance. Prepaid insurance. So we want only 3 months amount. So how to get this 3 months amount now? Can you tell me how to get this on 3 months amount? That is 300 into 3 by 12 we have to do. 300 into 3 by 12 will get 3 months amount. That's it. Because only 3 months is paid. See this, insurance is paid for 1 year up to 36 2015. Next, after this, you see, next one more adjustment they have mentioned, that is closing stock rupees 25,000. So now we know this is closing stock information they have given, that is 25,000. So where it will come? Two times it will appear. Two times it will appear. Where and all? Can you tell me? Closing stock. Yes, tell me now. Where and all it will come? Closing stock 2 times. Because it is given in the adjustment. See this. Whenever it is given in the adjustment, that item has to appear twice. So 2 times where and all. First, under profit and loss account, if you see, there is one working note, that is changes in inventory. Changes in inventory working note is there. So there you have to show this closing stock. That is opening stock minus closing stock. You will get a difference amount. That is known as changes in inventory. Working note number you have to see that whether it is working note number 26 or not. So it is, I think it is 26 working note number. Then you have to consider this closing stock information in balance sheet. Balance sheet working note, there you have to see you have to show this information. Where you will show, there is one more thing, inventory. Under asset side there is inventory, means one working note is there. Maybe that working note number we have to remember whether it is 17 or not. So let us check that working note number. That is, yes, see this, inventory working note number 17. So here you have to show. And one more thing you have to show here, changes in inventory, P&L working note 26. Yes, now it is clear regarding this adjustment. After this, transfer 2000 to debenture redemption fund. Yes. So transfer of amount to fund. So where it will come? So first thing you have to show this information under reserves and surplus. Reserves and surplus, under reserves after writing debenture redemption fund information. After writing debenture redemption fund information, you can show this information, that is transfer to fund, and this transfer to fund has to be deducted from profit and loss information also. So twice, two times adjustment is there. One is same under working note number 2. There are two category I have already told. One is reserve and one is profit and loss account. So first to the reserve you have to add, and from the profit and loss account you have to deduct. Why? Because this reserve is transferred from profit and loss account balance. So that is why from profit and loss account you have to deduct this transfer to reserve. Any dividend is also from where dividend is paid by the company. It is also from profit and loss account balance. So again, this dividend paid information also you have to deduct from P&L information. That is working note number 2. Yes. Then write off one half of discount on a debenture. So this discount on a debenture, you know, one information is given in the trail balance, and here they have said write off. So whenever it is write off, it is an adjustment of P&L. Under adjustment of P&L, you have to see under expenses. Under expenses, you have to see whether it is depreciation and amortization expenses. It is amortization expenses, so you have to consider this. So now they have said one half. So now we have to see discount on debenture. See this discount on debenture 1,500 they have given. So one half means 1 by 2. 1,500 into 1 by 2. If you do, you will get one amount, that is 750. 750 you have to show. That is working note number 29. Then provide income tax 5,000. So what do you mean by this? Provide income tax 5,000. What do you mean by this one? Provision of income tax 5,000 means it is a tax expense. It is a tax provision. So now two times you have to show. Where and all, because it is adjustment item. Whenever adjustment item, two times. So first thing, it comes under profit and loss account statement. Profit and loss account statement, after getting profit prior to the exceptional item and tax. Once you get total revenue minus total expense, you will get profit prior to the exceptional item and tax. After that, you have to show this one. That is tax expenses. Provision for taxation you have to deduct from profit prior to the item. That is in P&L account. Lastly, you have to show. Then one more thing you have to show here is, that is under liability, working note number 10. Working note number 10, there is a short term provision. There is one working note, short term provision, last working note of a balance sheet, liability side. So there you have to show this information. So once you show that both the information, that is this item in the both the side, then it will be clear because it's an adjustment item. Then final proposed dividend 10%. So proposed dividend 10%. Again, you have to show in P&L. Proposed dividend you have to show in P&L account. That is before calculating corporate dividend tax. Before calculating corporate dividend tax, you have to find out what is the total dividend paid by the company. That is why you have to show this proposed dividend there. And one more thing, can you tell me where you will show? Under balance sheet, can you tell me where you will show proposed dividend? Yes, tell me. Balance sheet working note, where it will come? Proposed dividend. Whether it is a other current liability. Whether it is a other current liability. Yes, it is a other current liability. So you have to show this information under working note number 9. Working note number 9. Then provide for corporate dividend tax. So corporate dividend tax you have to calculate on the basis of total dividend paid. That is total dividend. Once you got the answer of paid up capital into proposed dividend percentage, then interim dividend you have to add. Then you will get the total dividend. On that you have to pay this one, corporate dividend tax. There you will show. And one more thing you have to show in short term provision. Short term provision, tax provision. So there you have to show. So now we have discussed about these adjustments. Then lastly you have to do what? Prepare final accounts of the company in the prescribed form. So now we have